It seems like all we hear nowadays is that everything is going bad. Real estate's crashing, the stock market's down, but today, we're gonna see if Lubbock can stand the test of time and if it will be a haven against all the negative market factors. So let's dig right into it. We are in a recession, correct?
Depends on how you define.
Depends on how you define recession. Textbook definition of a recession, which is
2 successive quarters of negative GDP growth.
we have reported less growth in the economy on a macro for 2 quarters. What does that mean for the everyday average consumer, especially related to real estate? Well, the Federal Reserve has raised rates. Throughout COVID, rates were in the 2s to
High
2s to 3, so they were very low historically. Now they're about 5 to 6, which has caused borrowing to be a more expensive hobby. Your monthly payment, instead of being $1,400 a month or $1,500 a month, is now $1,800 a month just based on the interest rates going up. Naturally, that's going to push more buyers out of the market. More people can't buy homes because they can't afford that monthly payment. So now that we've discussed the macroeconomic trends, let's look at Texas, and then we're going to get into Lubbock to see how Lubbock is resistant and resilient against all these forces. Texas over the past 2 years has seen ludicrous growth. In 2019, we gained over 500,000 people, which is ridiculous. In major metropolitan cities in Texas, the demand was so high and the supply was so low that prices shot through the roof. Instead of offering asking price for a home, people were offering $50,000, $60,000 to $100,000 more over listing price of the house. Let's look at what happened in Lubbock. We saw a lot of people move here. Over the past 10 years, Lubbock has grown about 12% in population. And the influx of people to Texas, a lot of them came to Lubbock as well.
Being a Lubbock, I've seen it develop though in just a few years, especially being in real estate. COVID is an interesting time. You have builders where yes, it's low interest rate and the demand is there. These people are throwing money at these builders because it's 3%. Let me just buy something.
Builders were just scrambling to build. The supply we had could not meet the demand that we had. So real estate went way up. In Lubbock, we saw 19% growth around year over year, 19% growth. Crazy. That means if you bought a house for $200,000, it'd be worth what, 240 almost.
We don't guarantee it.
That should be 20%.
Right.
So the amount of homes for sale in Lubbock in June of 2022 was 827. That's a 25% increase since last month.
Which means?
When the Fed really started cranking rates up, people were spooked. They did not want to sell their houses. And the buyers are not going to be able to throw out offers anymore because there aren't as many houses on the market. And sellers still think they can get top dollar for their houses, which they can't. And buyers are going to have to pay more, so the buyers are whittling out of the market. Now, compared to last year, houses are actually up 41%, which means that the supply here is meeting the demand finally, which is good. We want that.
Looking back at 2021, looking at June, you have 25% more houses closed last year than 2022. So it's kind of a double-sided conversation. Yes, the market is slowing down, but that slowing down brings stabilization to it all over. So you're not throwing these crazy offers.
It's not, hey, let's offer 30 grand over, 40 grand over anymore.
The conversation is it's slowing down, but slowing down to a healthy speed.
I know you could maybe look at this data and think, oh, well, that's bad. The whole real estate market's tanking now. It's all going to crash. We've actually got evidence to support that that's contrarian to what it is. The average price per square foot in houses sold has continually increased.
Everything that sold in 21 that was overpriced and they're throwing offers over it, those go down as comp. You have to consider the demand. Buyers aren't making offers. We can't reach for the absolute top, but as a whole, that market has moved up on a price per square foot basis.
I believe in Lubbock in the long term in terms of where it's going, how it's growing, the amount of businesses that are moving here. We've got a really strong rental market. We've got a strong market in terms of Texas tech. I believe in Lubbock long term, so I'm still investing here myself. The demand has been so high and still is so high from Texas. People are just gonna keep moving here.
Even in a 2008 when it was a huge recession, Lubbock did not see the dip that a lot of cities see. You saw more of a plateau rather than a dip, and then it's just kind of a pause, and then it kind of goes back up. Lubbock being the hub city, it creates a weird economic bubble there to where you don't see as much dip, it's more plateau.
This is not financial advice, but my opinion is for the people who are saying, oh, I'm just gonna wait for everything to cool off for me to buy a house and real estate to crash. Dude, not only is real estate gonna keep going up, rent's gonna keep going up. As mortgage payments get more expensive, rent also gets more expensive. Cannot time the market, and if you wanna buy a house now and you're not buying it because you think the market's gonna crash, let me tell you, when interest rates go down, prices are gonna shoot back up because Lubbock's gonna keep growing and glowing. So if you guys are ever interested in moving here, give me a ring-a-ding-ding. My phone number is right there. I'll be your point of contact and we'll get this ball moving and rolling. Even if you have any questions about Lubbock whatsoever, I can help answer those too. Feel free to like, comment, subscribe if you'd like to, and we'll see you guys on the next one.